Today, we're going to talk about the all-new Luxalgo Patrick Wieland market flow trade trend lines and liquidity indicator that you can use for free right on TradingView. I'm going to show you how to set it up and the overall idea of how it works, what you should look for, and things that you could do to avoid false breakouts. Let's get right into it, my friends. What's going on, guys? Patrick here. Today, we're talking about the all-new Luxalgo market flow trend lines and liquidity indicator. Yes. What is it? How does it work? Let's talk about it. So normally you see me using the Luxalgo price action concepts indicator. This is my go-to indicator when it comes to having all of my levels, having all the information that I need, and the trend lines and all that fun stuff. Right now we're looking at the 15-minute chart right now. So this is kind of the end-all be-all indicator that I use every day, the price action concepts, which now Luxalgo has a deal going on. You can sign up for the Essentials package. There's a link down below if you want to learn more about Luxalgo and all of that fun stuff. But luckily for you, my YouTube subscribers, everybody watching this video, you get to have the Luxalgo market flow trend lines and liquidity indicator for free. It is on TradingView now. It is publicly able. You can publicly use it. It is publicly ready to go. So all you got to do is go to TradingView, right? Go to TradingView. You guys know how to pull it up. Go to your indicators, metrics, and strategies. Type in market, flow, trend lines, and liquidity. It'll pop up right there. Market flow, trend lines, and liquidity, and Luxalgo. Go ahead and click on it, right? Click on it. It'll pop up there on the screen. We got two of them now. Let's get rid of that one. And right now we're looking at the 2-minute chart. I would say that the 2-minute chart is going to be a little bit more consistent. The 1-minute chart is going to, obviously have more signals, but it really depends on the day. The big focus here, one thing that I really want you to understand is, number one, this is not a end-all, be-all indicator in terms of, you can't take every single signal, people. This is not like, let's take every signal and let's just do exactly what the indicator says, right? We've got to understand a few things. We need to understand what the overall trend is. What's the market doing? If it's a really choppy market, I don't love trend lines, right? The trend line breakouts and breakdowns, because really choppy markets, you end up getting a break of the trend line and then it chops back, and then, yeah, it's not that good. So stay out of the choppy market. This is a really good indicator to use when there's a solid trend, when there is momentum in the market. If the market's not moving, well, don't expect just because we get a signal that it's time to get long or get short. So if we look at this, you can go kind of through different time frames, and we'll look at like Friday, different time frames and different signals. So this is the 3-minute chart. You had a signal there at open to get long. It kind of pulled back, 3-minute. So I think the 2-minute chart's really kind of the kind of sweet spot in terms of getting good setups and still getting enough setups to obviously capitalize on the moves. So overnight, we had this pullback. We had this little signal. I like a couple things, right? This is what I want to see happen. I want to see consolidation, kind of a little bit of a bounce before breaking straight through that trend line. And I also want to make sure that our trend line break is corresponding to the 14 EMA, that blue line on the chart. So if I'm looking to get short right here, let's say I'm looking to get short on this signal. Well, I don't want to get short if we are, above the 14 EMA, that blue line. We want to make sure that we are below it, showing weakness, showing the trend is moving down. That's why I have the 14 EMA on there, right? We want to be either above it or below it based on the move. So for a short like this one, I see, okay, we got our signal candle. We broke the downside. We start moving down. You got a couple ways to play this, and I think there's 2 ways to really play this. You can play this where, let's say you get short on this candle when it closes to the downside. Okay, we get the breakdown. We got the signal. We can get short here. Our stop is basically like 36s, and, we're getting short here at 33. So we're only risking 3 points. And look at how far this went. I mean, it went down, 50 points from there, and it just followed the 14 EMA all the way down. So same thing over here for a long. If we're looking at this for a long, and I'm like, okay, I want to get a breakout. Where are we doing? We are above the 14 EMA. Perfect. We get the breakout. We get long. We ride this baby up. So from here to there, 15, 20 points. Now, during the actual market open, check this baby out. We got this nice little breakout candle here, this trend line. Again, the more this trend line gets touched before like an actual breakout, the better, right? Think about a few things, like what time is it? Is it, going into market open? Like you got to be a little cautious, choppy action, things like that. And, you got to kind of give yourself overall context. Don't just be like, oh my God, there's a signal, it's time to buy. Obviously, there is no indicator that can tell you exactly what's going to happen, but this is a pretty good one to give you some kind of actionable ideas. Also, on the indicator, we've got the all new price. We've got the 15-minute opening range. For some reason, I don't know why, but for some reason, 8:30 to 8:30. I'm gonna talk to Luxalgo, but the actual 9:30 15-minute opening range, if you want it to work on Eastern time, put it as 8:30. Put 8:30 there, and well, it'll actually work. So there's your opening 15-minute opening range. These dotted lines, dot, 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 showing you that 15-minute opening range. And you can see we had some other opportunities later when we bounced off that. We got back down here again. We kind of then turned that into support. So it's nice to have that 15-minute opening range. We talk a lot about this strategy when the market either breaks the upside, breaks the downside. So I like that it's built into there. And then again, this is a totally free indicator on TradingView. So we got a couple of different ways that you can adjust this as well. You got this slope. So right now I've got it set to 1.2. I think it really matters on the time frame that you're using. Now, if I go, let's say, to 1, you'll see the slope obviously is going to change a little bit here. So you see how the slope changed a little bit there. So I have found, I think that 1.2 slope is pretty good for the 2-minute chart. I think it's like kind of the sweet spot. Now, obviously you can adjust this based on your time frame. You got another option too here. Let's say you want to get the trend lines from the 2-minute chart, right? But you want to trade on the 1-minute chart. So you go here. Now we are on the 1-minute chart, but we have the same trend lines from the 2-minute chart. So you could do it that way. You could trade on the 1-minute chart. And like if we look here, all right, we got our signal to get long. We got that close above there, kind of chopped around there. But you could trade on the 1-minute chart with the 2-minute signals. You can go to like the 5-minute chart again with the 2-minute signals. It gets a little weird. So where's it at? Let's see how this looks on. Yeah, it gets a little funky. A little funky there, but we still got some good, pretty decent signals. You really got to mess around with it. This is kind of an indicator that is really great for kind of messing around and figuring out like what style works best for you, right? Like what works best in your overall trading strategy. Now, some tips here if you want to avoid, false breakouts. Now, how does that work? Oh, well, Patrick, like, how do I avoid these, false breakouts? Or, this went from 300 up there to 322. Now, obviously, we know that this is resistance, right? Like that double top right there. Well, this is obviously going to be a resistance. So we get the breakout right there. You can't be mad. You can't be like, well, I didn't know that it would pull back right there. Well, we see that there's double top. It's there. It's obviously very noticeable. So you have to be aware, right? You have to be aware of things like this. Another thing that I really want to advise on as well is you want to be careful when we get these like big candles straight through, like a big drop straight through these trend lines. We don't get like kind of that consolidation and then the breakout. I would say we normally get like a retest. Again, like look at this, right? Look at the 14 EMA. This is a really good indicator here to really kind of think about your entries. Because if we break through here and we go straight down, look at how far, at this point, how far are we from that 14 EMA? We're pretty far from it. So the market pushes back up 14 EMA and then makes the move down. So I think there's a really kind of good lesson here. If you're going to take these signals, make sure either one, we're breaking out pretty close to that EMA, or we're waiting for a pullback into the EMA and then we're looking for another short opportunity. Right? That might be a good idea. Look at this. So like here, again, we break out, the EMA is like 10 points away. We get the signal, guess what? We pulled back into the 14 EMA. Here on this breakdown, look at how we are pretty much stuck there at the 14 EMA. We had a lot of kind of tappers, and then we got stuck, and then we moved down. So I really want to see those breakout candles being small. I don't want a big candle for a breakout candle. I really want like a small breakout candle. That's telling me that there's like consolidation. There's a good chance the market's not going to just like whip through those levels, right? We're not looking for those just whips. We want to see kind of some consolidation. Here again at the open, what are we doing? We're holding the 14 EMA. We get the signal. We're kind of holding 14 EMA, and then we made the move. So it might be a little bit of a lesson here. If you're looking for a breakout, make sure that it kind of bounces or is right off that 14 EMA. If we look at some other days here, let's not just look at Friday. Let's look at other days. We had like this one here. Same kind of story, right? We got far off of the 14 EMA. We're about 30 points off of the 14 EMA. We get the push back up, and then we reverse. The overall trend on that day was up. So we want to make sure that we're being aware of things. Like here again, double top set up there. We pushed up, double top. There, we pull back. We kind of, tapped that double top. We pulled back here. We consolidated nicely right there. We're at the 14 EMA. Then we made that move up to another kind of resistance up there. And again, so I think it's really important to kind of just obviously understand the overall structure, the overall idea here. What's the actual trend? Don't just go and get short every little signal, every little move. Again, right here, look at how far, at open, we had a signal all the way down here at the 57s. Now, we just had a big move down. We just got really far off that 14 EMA. So I'm not sure, that I want to take that short down here at the lows, knowing that we're that far from the 14 EMA. Look at how far, right here, we're at the 55s. We're about 30 points away from the 14 EMA. But you'll see here, we kind of got another good kind of push back up. We hit the 14 EMA, and then we sold down there again. And yeah, I think that 14 EMA really is a good guide to make sure you're not chasing the price action. If you feel like you're shorting or you're getting too long, far away from the 14 EMA, well, that's probably, telling you that you're FOMOing or you're chasing the price action at that point. Here, we're holding the 14 EMA. It's really just I think the 14 EMA is a good kind of guide to make sure that you're not, doing anything too silly here. And again, 9:30. These 9:30 breakouts are always great. This is back on Tuesday. We had a really good signal. We had a sell signal here. It pulls back. Still, like these signals are still giving you like 20, 30 points for these downside moves. But again, it's like, look, kind of like you can see we're already off of that 14 EMA right there. Questions. Here, you can see we're bouncing off the 14 EMA. We got that breakout candle. Then we made that big move up. And look at the profit on this one. From the 16,000s all the way up there to the 120s. All the way up there to the 120s, my friends. So, it's something to mess around with. Obviously, it's not the end-all, be-all. The market's going to do what it's going to do. But I definitely think, if you're looking for opportunities here, there's some really cool stuff to mess around with. Also with the price action concepts. If you want to learn more, there's a link down below. We've also got the liquidity kind of indicator built on there as well. That's going to show you kind of where the areas of liquidity are, previous areas of price action where we bounced and things like that. So depending on kind of the overall setup here, like if we pull, let me look at this one. You can see we got liquidity basically drawing lines on those previous highs right there. So liquidity levels like do. And that's basically saying if we were to like push up here, we'd be looking to target kind of those levels there, those previous highs on those candles. So we're looking at like two liquidity levels as like a possible pushback up, kind of a target. And yeah, have some fun with it. Check it out. The Luxalgo market flow trend lines and liquidity indicator. It's free. You can use it today. Just check it out. Let me know in the comments down below if you appreciate a free indicator like this. Maybe we'll work on some more indicators with Luxalgo here very, soon. Talk to you guys later on.